Welcome, people. Welcome, everybody. I'm going to give you guys a chance to get in. Today is a very important day, and we need to discuss what's going on. So get yourselves in there. Let's have a discussion as to what's going on. All right, I'm going to get you guys in a few moments. Get in, everybody. Welcome if you're coming in. Welcome, everyone. All right. This is going to be an very important session that I talk about, and I won't leave it just here, but I will kick off here. So we will look at the crypto market and stuff and do our normal analysis, but I do definitely want to go through these things that we're discussing here. So if you have anything you want to say in the chat, you can say so. I'm more than ready to listen. Okay, but get yourselves in as we're discussing what's going on, and we can take it from there. So, all right, without taking too long, first of all, I want to go through the crypto market as traditional, and then we'll come back to what I'm talking about. So as we can see here, guys, I'm still keeping my eyes on Bitcoin. I'm going to use two different charts to describe what we're going through at the moment, and just for you to see what's happening. Now, I've noticed that on the 20th of each month, there's been crazy things that have happened. The 20th of last month, every Forex pair reversed. The 20th of July, every crypto pair reversed. And now the 20th of September, we're having a 2020 kind of situation going on where we've seen the Evergrande situation get to crazy levels of danger. All right. Now, this is probably, I feel like, you know what, these last 2 years, 2020 and 2021, are definitely ones for the history books. Some of the stuff that we've seen take place, I know for a fact that it's been a crazy ride of so many different things. But anyway, what I'll do, I'm going to kick off here. Let me go from where we are right now. So on the weekly time frame, guys, the most important thing, I discussed this many weeks before the price happened. Now, I'm not a person that does, I do believe in market coincidences. I don't think that anything on the market is unknown. Any price crash, any price movement is very well known to, as we call them, the powers that be, okay, which can be a plethora of different people. Now, in the discussions that we were having earlier on, you know, when it came to the financial markets, when the market crashed, we had quite a few different situations and scenarios taking place which caused the price to do what it's doing. But I just want to recap here, first of all, before anything. So this weekly algorithmic level is the last algorithmic level on the order block, which could present an area of most likely reaction. And we noticed, if you notice that if you were with me on the live or you just understand market history, that the moment the price touched this price point right here, this is the day that we had Bitcoin Day. This is the day El Salvador, I mean, what are the odds? El Salvador announced that they'll be accepting Bitcoin as legal tender. Now, I want to ask you a question to ask yourself. Before the price started to show off the way that it did, do you think they didn't know that they were going to release it on Tuesday? It wasn't a surprise to certain people, and definitely people who have either positive or negative agendas against Bitcoin and crypto in general would have known this too. Okay, because information is not that difficult to grab and know it before other people or the general market knows it. So when the price hit this algorithmic price point, I told you quite a while back that once the price gets here, the price will sell off. There is going to be some sort of sell, and this sell may be the trigger for a massive movement short. Now, so far, the price has held true. Now, we haven't had the return to 50, but what the price has done, I will show you in a moment, is that it's done a reoptimization of demand for a short. Now, why do I keep going through the same price point all the time? Well, if we look at market structure here, we had a very strong bullish movement that took place, as we know, in the month of April. We had a very strong short. Now, this strong short that we had, which is characteristic to many of the market crash that we saw in crypto across the board, one of the most important things that we got to remember is this supply zone here. Now, as I was saying to you last time, if you want to see this on TradingView, the broker Hugo's Way uses the price feed from Bittrex. So the price feed comes from, no, excuse me, Bitfinex. I think I said Bittrex yesterday, but it's actually Bitfinex. And so if you want to capture this supply zone, now I've noticed that on some charts, the supply zone doesn't show up. So if you're trying to look at the charts and wonder, wait, how come I can't see this? Well, here's the supply order book from here on MetaTrader. It does show up on TradingView also, but this supply zone was instrumental for the price to make its way down to where we saw the lowest points here back in July and also in the month of June. Now, when the price broke past here and we had this long scenario happen, the 9th of August, it was really the first time the price broke above and returned to the other side. Excuse me. Yeah, around the 9th, it will be here. So right here is the 9th, so you can see this. We saw the price form a bullish structure here. We had an ABCD swing, second ABCD swing, until we got to the algorithmic price point, which is where the price started to reverse very strongly. Now, remember, guys, when we were doing this analysis, despite this algorithmic level, to the left, I was saying that we should pay attention to the demand zones on the left until there isn't any left. Because crypto is such a new space, there isn't enough data for us to really have that. Not saying that we can't have that much analysis, but when the price makes a new all-time high or the price is moving from a recovery stage, there isn't that much information that we can go by because, again, a lot of cryptos are making new all-time highs as time is going along. So when I'm using the demand zones, that is really the crux of the matter when it comes to how to analyze, because until the price gets to the all-time high, at which point we'll be in price discovery mode, the only way we'll be able to assess how much demand or supply is in the market is to look at the demand zones specifically to the left, because the demand zones were triggers for the buy. So the price reoptimizes any of those for supply, then that means we'll be going on the short side. So at the moment, the price has stopped at this one, which was a major one here. The price has got into this region and has shorted from here. Now, again, why has Bitcoin not taken off to the long point that it was supposed to? Well, the price has managed to hold on the daily structure here. Here's the daily demand zone here. And if I drag this across here, this daily structure or demand zone was really the trigger for the last bullish movement we've seen so far. That took us all the way to about 52. Now the price has broken beneath here and returned to the other side and given us a reoptimization short. Now, this Evergrande situation, I believe, is a very good trigger to cause another panic across the markets. You have to understand, first of all, with crypto, the biggest difference between crypto and stocks. Now, I know there are some comparisons in terms of market activity, which is from human psychology, which is the fact of, there were pennies and then they went to a large amount of money. And then when people saw that, they bought right at the top and then the bubble burst. And then as time went on after the recovery, these companies have gone on to do amazing figures in the future over the long term, which is similar to crypto. We had that first massive pump in 2018 and then quietness for a few years as the market crashed. Many people lost their life savings because they FOMO'd in. And then we've seen another rise in the price. Now, the biggest difference between crypto and stocks is this. Stocks, when they came in, yes, many companies disappeared because they didn't choose to, move with the times, if you want to put it that way. But another thing with stocks is it was a new technology to layer on top of a previous technology. Crypto is not the same. Crypto is actually the replacement of one way of society and technology for another. Now, the technology within crypto is not so much hardware as it is software. In the internet age, a lot of hardware had to come into play to support the software that was coming along. And not all, but what the internet did was allow for connectivity between human beings to become massively more efficient. Okay, so people could connect with each other without being in the physical location, and being able to do business and transactions and etc. And so the world had more connectedness, more value could be shared across the world. And so stocks wasn't necessary. I would say the stocks, and specifically when I say stocks, I mean the internet revolution, didn't affect the government per se. And plus the government had the technology in the 70s and 80s. It was just released to the public a lot later. Now, when it comes to cryptocurrency and what crypto means, is going for the highest tier of attack that can happen, to a current structure or the current structure we have, which is economy. Okay, crypto is a direct, and it will be, I believe, a direct replacement for how economics works, which we know that the world runs by money. Governments need money to be able to do things. And currently, since 1971, and a lot longer than that, dating back to 1913, governments haven't been integrous with how they've managed money and what value is in an economy. Okay, we've gone from a system where governments can only earn what they tax. Now, I'm going to write this here so that you can have some recap. So I'll write this here for you guys before we continue. Crypto versus stocks, all right? What is the major difference here? So if I draw an arrow to the left here, and then I pull one up to the right over here, just to rehash on these points. So number one, with crypto is especially, I'm going to put in brackets, especially Bitcoin, is a direct offense against current. All right, and I'm going to put this here so that you always remember. So cryptocurrency, especially what Bitcoin represents as a store of value, is that a direct offense against the current economic infrastructure we have. All right. And there are several reasons for that. Okay. One of the biggest reasons is because despite Bitcoin, yes, of course, is using a lot of energy and etc. That's fine. But when it comes to Bitcoin, Bitcoin actually is a deflationary asset. Okay, that's the biggest reason for it. Every currency that we know of, or what we call fiat currency, so pounds, dollars, yen, whichever you want to call it, there is no maximum supply. I've talked about this in detail before. There isn't any maximum supply of how many notes are in circulation. Now, there is a total supply, but there is no maximum supply. I'll say that again. There is a total supply, but no maximum supply. With Bitcoin, there is a maximum supply, which means there will never be more than, in this case, 21 million Bitcoin. Now, immediately that happens, and there is what we call a supply cap. It allows there to be a situation that over time, instead of Bitcoin being inflationary in nature, it becomes deflationary, which is what makes a store of value a store of value. You don't want to put your money into a currency that has no maximum supply. So every time they print more, your currency devalues. You have to remember, I'm going to write this here for you guys because I think this is so important to understand the Evergrande situation. Okay. Maximum supply or / limited supply, okay, equals to deflationary economics. Now, at the moment, every bank, I don't care what you want to say. I used to work in one. I won't name the name for legal reasons, but I worked in one for 4.5 years. And I can tell you, all right, that the infrastructure of banks and of the banking system is not designed for the people to win. All right. Neither it is with government. All right. Now, fiat currency is inflationary. Why? Because there is no maximum supply. All right. There is a total supply. I mean, the way you can calculate that would be to just go to the Bank of England and they would tell you how many notes are in circulation in money. And you can give a work out how many notes there are potentially. Not so easy as a calculation. All right. So I'm going to put this here, but both have a total supply. Now, total supply means how much is present right now, but it doesn't mean how much it is for the future. All right. Now, because every fiat currency has this, every fiat currency, okay, and I'm going to put this here for you to understand what's going on. All fiat currency, which means pounds, dollars, whichever currency from any country, okay. This is important here. Devalues over time, okay? The reason why it devalues over time, let's change this U out. The reason why every fiat currency devalues over time is very simply because the maximum supply can be, or the total supply can be increased. Now, the more supply there is of an asset or of anything, the cheaper the price becomes. This is just economics 101. So scarcity, which is a very important term that is used within the crypto space and is used with gold as well. Gold also is in the category of in a sense, a deflationary asset and a store of values primarily. Reason being is because gold has a finite amount that exists on the earth. Okay, there's, I believe, 3 parts per million for every 100 parts per million on the earth, something of that nature. But otherwise, there's about 0.3%, and this is in the earth's crust, by the way. I think there's 0.3% gold that exists on the earth crust, theoretically speaking. Around that, we don't, now to a good degree, we know what the maximum supply is, which means unless we do space mining in the future and mine gold from asteroids, there will only be a certain amount of gold that exists. So if you ever wondered why gold is so expensive, it's not because it's a shiny precious metal, it's because of scarcity. Scarcity is a very important economic attribute that makes a currency or makes money. Now, currency and money are not the same thing. Money is the actual value. Currency is the representation of value in some sort of form. So, for example, currency, paper value is supposed to, or paper money is supposed to represent the value of an underlying asset. Okay. So this is something that's going to be important in your studies and your journey. So where we are right now, and with this crypto market, the day that Bitcoin was made legal tender was a direct offense against institutions who have interest in controlling money supply and monopolizing money. Okay, because at the end of the day, all right, for certain countries, they have the ability to produce as much currency as they want. Okay, whenever there's a financial crisis, they can print their way out of it temporarily. And this is what every government has been doing. All right. And it comes to a point where if you keep on printing money and people could lose in value, there's one major thing that can happen, which is a loss of confidence. If there's a loss of confidence, all right, loss of confidence. I also want to give you these keywords before we continue. A loss of confidence in a currency equals to mass currency devaluation. Now, why this is important? I said to you guys that affects all of you, whether you are a trader, an investor, or you don't involve yourself in the financial markets at all. I'm going to put mass currency dev, which it doesn't mean development, it means currency devaluation, just because I don't have enough space. Now, a massive currency devaluation means, for example, all right, let's say you're a millionaire, easiest one. So I'm going to use pounds because I'm from the UK. So let's say you're a millionaire, okay, in 2021, all right. And because of this thing called what we call quantitative easing, the ability for governments to print more money, every time they increase the money supply, you lose value. Okay, so let's say by 2025, all right, 40% more currency is printed. Even though the calculation is complex, in other words, you will lose 40% of your value. So in other words, you'd be worth 600 mil, 600,000. This is just a short roundabout way to explain. Of course, it's more complex than that, but this is in essence what happens. Every time money is printed, and this is why, even though people say cash is king, I don't see cash as king. Cash is king is just a phrase that people have coined from a few people who, in a certain era were teaching, money and money management and etc. But cash is a liability to me. The worst thing personally for me to hold in terms of anything with monetary value is cash, okay? Because there is no, as we said, no scarcity. As I always say, as many trees as exist in any country is kind of virtually how much currency can be printed. And this is why I would say to you that you want to be very careful in this time. For those of you who, this is not financial advice, but I would say to you that seek a financial advisor, seek some help. I won't tell you what to do. I can't legally do that. But just for me, I know that cash is a liability. Now, crypto, specifically Bitcoin, and now there are some cryptocurrencies that also don't have a maximum supply, but they have a total supply. And therefore, they are inflationary. But Bitcoin is not as such. Okay, with Bitcoin every 4 years, the supply is divided by 2, and the demand stays, the same and is aiming to grow. So that means that over time it becomes more and more deflationary instead of inflationary, which means if you hold your wealth in Bitcoin, in 10 years' time, you can guarantee for a fact that you still have your wealth or most of your wealth, inside of that, inside of Bitcoin. Whereas with currency, if you hold just cash, you set yourselves up for being in a situation where every time the government decides they need more money and the central banks of those nations print more money, you're losing value each time. So this is why I would say to you that we're in a very important crisis. And it only takes one trigger, guys, to cause financial issues that will change the world forever. And this is where I come to Evergrande. Now, finishing off here with the Bitcoin analysis here. If today, guys, I've been talking about it for a while. When we got to this point in history here, which was about 7 or 8 days back, when we got back to this point in history here, let's put this here. When the price got back to the situation that we had here, back on the 13th, the body of the candle hasn't closed beneath this supply zone. Now, this supply zone, if the body of the candle closes beneath here, what the market is telling us is that we're entering back into levels of supply, which is what triggered the first movement. Now, I've told you already at this price point here, there's inefficiency here at 29,000, around 29,000 to 28. And if this is the trigger for it and we have a daily close, expect the price to continue pushing its way back down and giving us a very heavy short. This is exactly where I believe the price is going to go to. Now, to finish off here, before I go into the Evergrande situation, what I am going to do is switch over to IC markets. So on IC markets here, guys, I'm going to put out the same algorithmic level. So here we go. So the same algorithmic level shows up on every single chart, is the last weekly one. If the price had closed past here, then we would have been on a very beautiful movement long. Now, we'll come back to what I was saying about crypto versus stocks. I haven't forgotten. I just want to make sure that I put some stuff out there. So let me put this here. So as the price is doing what it needs to do here, the price has gone short, of course. Now on IC markets, I've told you guys this before. If this is your first time joining on live, there's no worries at all. In essence, my theory is that we have liquidity caps on Bitcoin all the way down to $9,633, $33 to $35 approximately, which haven't been filled yet. Now, looking at the price feed all the way back for the last 2 to 3 years, I've been observing every single week to assess whether these gaps on IC markets are due to price feed, where the market just doesn't have the price data to show what's going on, or they are actually gaps. Now, I heard another trader talk about this separately, who said that he's seeing gaps on Bitcoin back down to 9,600 also. Now, to me, from the structure of what the market looks like, it doesn't mean Bitcoin is going to crash to zero, but there are liquidity gaps across the board, which I do believe the market needs to fill out. And we may actually be seeing this happening right now. So I'm not telling you to sell your crypto or to do anything. That's up to you. For me, I'm a hodler, so I'm holding on no matter what. But the liquidity gaps that have been left here, if the price does take the low as I expect, the first gap target would be down to 24K on Bitcoin. Second gaps that are available on this market would be between 18 to 17. And the final gaps, there's two, one at 11, and then the final one here. This will be the final liquidity gap that Bitcoin has. So to me, where we are at the moment is a crucial time. And if the Evergrande situation plays out as I believe it may, this may actually be the final trigger to cause the market to do such a thing. Now, this is just for me. I think this is more for the short to mid-term, but over time, I definitely think that the world will start to realize how broken the financial system is. All right. So this is what I'm looking at when it comes to Bitcoin. And essentially, every other crypto is following suit the same way. I spoke about Cardano more recently, in more recent times, and I would say to you that at this stage that we're at right now, it'll be very important for you to keep your eyes peeled on what we're looking for. So let's have a look at the Evergrande situation here. All right, I'm going to pull up the chart for Evergrande just to show you what is going on, and then we can actually look at the other pieces of information here. All right, so stick with me. Let me switch over quickly. All right. So let's have a look here and see what's going on. So here's the chart of Evergrande, guys. And as you can see how crazy it is. So Evergrande started in 2010 at lows of $1.54. And at the moment, the price has crashed so badly is the price has literally gone back to almost where it started 10 years ago. All right. So which tells you everything you need to know about this company. Now, why is the Evergrande situation so grand? No pun intended. The reason why it's such a grand situation is not because of the company itself per se, but it's who the company is connected to. And I'll go through that in just a moment. But when we look at the price action here, I just want you to keep this in mind before I line this up here. So I'm going to put a vertical line here to show you what exactly is going on. So from this point here, April 2020 or April or March, the price was around $15, something of that sort. Okay, around here. And the price in the last month has dropped from $4 down to $2. And it probably may even get down to 50. And now this is in Hong Kong dollars, so 50 Hong Kong dollars. All right. Now, when we look at the chart, I want to show you something here in line with what happened in the news piece I'm about to show you. And it's going to be from here. Now, how would you have known this price is crashing? If you want some tips, guys, this is what I'm saying. If you don't, in this phase of the market, I mean, I think because sometimes it's just the truth. Some people are just lazy. A lot of people want the money, but not the process. That's just the truth. Now, I would say to you, if you want to be able to be a good investor, it's not good enough for you to just know about a company and if it's going to do well or not. You do need technical analysis. And the reasons you need technical analysis is you need it for two reasons. Number one, you want to be able to understand how other traders are thinking and other investors are thinking, which you won't be able to tell unless you look at the charts. How come you can tell from there? When money moves in the market, it comes from the mind of the individuals who are investing money or taking money out. So if you want to know what they're thinking to be able to have the upper hand, you do need to have technical analysis skills. Now, the first thing I want you to do is if you're an investor only, take it out of your mind that you're not a trader, because you are. Every investor is a trader. All you do is you trade in slow motion, and you don't have your stop loss is when you want to get out. You may not have a stop loss as a trader does, but you still have a mental stop loss. So you are a trader, it's just in slow motion. So I've spoken to many people who say, yeah, bro, I'm not really a trader like that. I'm more of an investor. I understand what you mean. Every time you trade your money, pounds, dollars, whatever, for an asset, you've just made a trade. So you are a trader. It's just you're not a day trader, as we would say. You don't look at the charts every day, which I don't think is for everybody. Because psychologically, yes, it can be taxing. Now, how would you have known to get out of your positions before this movement happened here? Well, a tip for you guys for your analysis, if we look at this weekly demand zone right here, we can see the price starts to accumulate inside of this area. Now, I've spoken about the accumulation thing quite a lot. Whenever there's an accumulation, there's a redistribution of liquidity and there's a shift in the number of orders in the market. How do we know that? When the candles go from being very big, if you want to make it very simple in layman's terms, to very small, and they keep hanging around a certain area. Now, in this case, it's a demand zone. At the first break, which is at right here, 26th of April, you want to be out. Now, if you're an investor, okay, you may have said, okay, maybe the price is going to bounce or something like that. I've spoken to some people who say, okay, yeah, price is going to, bounce because of, there's a piece of news saying that Evergrande is going to get funding or something like that. Now, I'm not saying fundamentals are not good, but just with this, like with this Evergrande situation, I'm going to show you in a minute. I promise you I will. Just because there is news about something, or see it this way, when news comes out about something like Evergrande, just know that there's a thousand other people a lot higher up who knew this many months ago. So the timing of when they release this is when the market conditions are going to be conducive for whatever their goal is. So usually when it comes to us, the laymen, if you want to call it that, the retail traders, we're the last people to know news, unless somehow you have an inside link. And this is why there are rules around inside trading. Okay, the whole reason why there's rules is because there's a very stark difference between when we know something and when the big guys know something. This Evergrande situation, although the world is kind of going crazy at the moment, many people knew about this a lot sooner. So here's a tip for you guys from a technical standpoint. If you ever see a situation like this, you want to get out. Okay, don't wait for the news to tell you to get out. Don't wait for someone to say, well, Evergrande might do well. Just get out. Because if you didn't, and maybe you say you bought at, I don't know, this price, you would have lost so much of value already by now, and it's almost too late. Okay, so don't, if you're an investor and you're listening to this, even if whether you're on the live stream, wherever you are, and if you do have questions on the live stream, please ask. Just please do me the favor and try to learn some technical analysis. If you want to learn something and you don't know where to start, I have a link in the description below that will show up after this live stream. It's called the Mastermind course. It's a free course I've put together that you can actually learn how to read the price to a very basic level, which at least will help you to get started. Don't be ignorant, guys, because from 2020, the shift that we've seen in the world and with money, we're in a very different world from the last 20 years. So we can't play the game the same in order to win. All right, so let's have some look at some news and let's see what's going on here with the Evergrande situation. I really want you guys to see this piece of news because it's intriguing to me what's going on. All right, so let's go right here. I'm going to pull this up now. I'm not subscribed to the South China Morning Post. One of my senior coaches, Alexandro, sent this over to me, but I'm just going to show you the news pieces that I have here for you to see this. So switching screen now. I won't spend too much time on here, but I just want you guys to see this. So really the main line is up here, the main points. I mean, there are more things, but I'm not subscribed to South China Morning Post, unfortunately. But let's have a look here. So here's the article. So Evergrande's staunchest allies drop out as Chinese property developers' creditworthiness deteriorates amid debt walls. Now, if you want to know what the debt walls are, at the moment, Evergrande owes 305, I believe is billion. Now, somebody said million, but 305 billion altogether dollars worth of debt that they haven't paid back. Now, Evergrande's, and this is key here, Evergrande is a very massive company that has a lot of subsidiaries, and we'll go through the subsidiaries in a minute because it's important for those of you who would like to know exactly what's going on and how this is going to affect you and possibly your families too. All right. So again, if you have questions, guys, I'm here to serve you guys. So if you have any comments or you have a question, just type it in on the live chat and I'll answer it. Okay. But in the meantime, anyway, all right. Joseph, I'm sorry for those of you who are Hong Kongese. I'm not good with the names, but Joseph Lau Leng Hung and Chan Hoi Wan sold 138 million Evergrande shares several times last month. Now, this is dated, okay, this article is dated 17th of September, so 3 days ago, okay? Now, 17th of September, 3 days ago, they sold this off basically in August. 138 million shares sold several times last month for 500 million Hong Kong dollars. Now, why do you think they will do this? Very simply, they know that a financial crash is on the way that they can't avoid. So they're trying to get themselves out very quickly. Now, the key word here is that they sold several times last month. The reason why they sold over several times is because they didn't want to trigger a massive market effect because they are large shareholders. So if they sell everything at one time, as a market principle, it will trigger panic selling and they won't be able to get out of their positions because in the stock market, every time you're selling, somebody's buying. So they had to do it over several periods, not to trigger any, or not to trigger as a big reaction, and also to be able to get all of their sales or their orders filled out. When you trade crypto, Forex, or you're in crypto and Forex, it might be a little bit different because there seems to be enough liquidity most of the time. But in a situation like this, they had to be very careful. Now, Lau and Chan cut their shares to 7.96%. So they still have some shares, second only to Hui Kaiyan's controlling stake of 70.7% in the Shenzhen based Evergrande. So you can see here that these guys, not being disrespectful, but something's going on. They know something's taking place and they're reducing the shares massively. Now, the first part here before it starts to block off is that two of the property magnates or magnate, Hai Kaiyan's staunchest allies appear to be bailing out of China's Evergrande. And this is a key here. His two major allies are bailing out, which means something's up. Okay. Now, some people are comparing this to the Lehman Brothers situation in 2008, which was from the subprime mortgage crash. Funny enough, it is to do with property again, but this time in China instead of the US, and selling off a large chunk of the developer stock ahead of the gathering storm and deteriorating credit rating. So here you go. $300 billion in liabilities. Now, Joseph, the founder of the Hong Kong developer Chinese Estates Holding, and his wife, Chan, again, sold 138 million Evergrande shares several times over the past month for about 500 million or $64 million in total, according to the filings. And Lau and Shan reduced their holdings from in the Shenzhen-based developer to 7.96%, okay, which is interesting. So whatever their percentage was before must have been quite high, but the fact that they're doing this and they've been allies for a long time, this is a signal that you should be getting out. Now, I'm not trying to give financial advice again. Please hear me out carefully. I'm not, but from what you can see here, there is a storm coming. Now, the storm is not really because, I mean, China does business with virtually every country in the world, but why Evergrande is a very important situation is I'm going to do another video to explain China's housing setup. All right, why is the housing market in a bubble, which it is. But what I can tell you is that the way that China's laws are set up, the reason why there's such a housing bubble and there's such a demand for housing is because in China, or I don't want to say it's culture, but in China, where you live determines what kind of healthcare you have access to, where your children go to school, and etc. And so many people from the rural parts of China have been storming the capital and places around the capital for many years and fighting and working as hard as they can to get housing. Because once they have a house, in those central cities, then it allows for their children to have a better life, and if you're not born in the city and you have to work for a certain amount of time and get a house for you to be eligible for certain benefits. Now they have a numbering system for this and quite a few things in that way, which is a very unique setup from any other country I've ever heard of. And so because of that, there's a large demand for housing that we've seen over the past 20 years due to China's crazy development in the last 40 years, okay? So because of China's crazy development from what it's become, and many people are trying to get into the nation, Evergrande stands in the middle, is one of the largest real estate groups in China. So if they default, hundreds of millions of people are in big trouble. So that means this crisis means that a lot of countries, a lot of people are going to be affected, I would say for the short midterm, but this is a situation that could cause an economic meltdown, and I do believe it's going to happen. All right, so I'm going to show you another piece of news here, and then we can break this down. Now, if you have questions, please, again, drop a message in the live chat. Let me go over to what we have here. So this is from The Guardian. Now, Evergrande investors face 75% hit as company edges closer to restructure. Now, analysts say it's massively indebted China property group likely to be dismantled to avoid triggering a market-wide panic. Now, if that does happen, that may help, but at the moment, and I want you guys to see the figures, I'm going to try to cut through as many things as possible here. But if it says it here, I hope it does. But in essence, Evergrande has 171 banks that it owns. Owes 171 banks. Now, the massive debt that they've been trying to avoid, and I'm going to read this here from the words of The Guardian, Evergrande has been struggling to manage its enormous 300 billion debt pile for several years, but tougher regulations about debt levels brought in last year as part of President Xi Jinping's drive against inequality has accelerated its crisis, okay? So backing up what I'm saying here, you can see the same thing that The Guardian is saying. The property market has exploded in China in the last 2 decades, and the total amount of real estate sales was 16 trillion yuan or $2.5 trillion in 2019. And this is 10% of the country's economic output, or in other words, the country's GDP. 10% comes from property. And I've told you it's because of this situation that we've seen where people are rushing to get to the capitals, but it's not because of necessarily being in the capital. Of course, you make more money because you're connected to more people and etc. And every economy rewards a connectedness, but that's not really the major issue. For Chinese people and people living in China, them moving towards the capital specifically, and we know capitals will be more expensive, is due to this system I've told you about, how, in essence, a family's life is controlled by where they're born, where they live. Okay, this is the system. This is a kind of the communistic aspects of the country that we see. These kind of laws that, although it's a democratic republic, and I'm not trying to put China down because they've done fantastically well, but in terms of the kind of communistic undertones, you can see that you're judged basically and you're controlled by where you live, and unless you move where you live in, etc. So it's a bit of a mess there. Now, I want to pull up this piece of information for you guys to see one of the biggest things here. Let's see right here. Now, it doesn't say it here, but I am going to pull this up. It's probably going to be on ZBiz, but let's see. Do they have it? Okay, I'll use Crypto Potato, which is my favorite. I've been using Crypto Potato for a while. Shout out to them. They are really good. All right, but I want you guys to see the numbers here. Here we go. So in order for Evergrande to be where it is today, okay, it has, over 1,300 projects in 280 Chinese countries. But what's more important here is over $300 billion, of borrowing has happened over 171 domestic banks and over 120. In essence, they owe 392 financial institutions, 392. So if they default right now, 392 people or 392 financial institutions are going to be affected. Now, this is where the financial crash can come from. Why? I'm going to show you this quickly here and then I'm done. Now, the reason why the situation is so bad and is about to get worse, in my view, is because of this credit crunch situation. Now, you've heard this term before, and again, this is what credit crunch is about. Now, if the company defaults, and its lenders, including financial institutions, are going to be forced to do this one thing, and I end on here. They will be forced to lend less and increase interest rates. Now, right now, with the COVID situation, interest rates are at a base rate at the moment to encourage spending. Now, if they have to do this to discourage spending on their side, this means that the economic growth is going to slow down across the world to a very bad degree, which will put some countries into recession. And this is where the Evergrande situation affects all of us. Your families, the cost of how much it costs to borrow money and etc. will be affected by this situation. And this is why it's very similar to the Lehman Brothers situation. So I would say for you guys to watch out very carefully as to what exactly is going on, because if they do default, and in the next couple of days, we're going to know for sure, if Evergrande default, is going to send ripples across Forex, crypto, you name it. Okay, everything is going to take a hit, because that means that many financial institutions have just lost out on billions of dollars, which, remember, those billions of dollars that financial institutions lend and borrow, where does it come from? It comes from me and you, from taxpayers, from people working, from people that have savings, and therefore it's going to affect the people. So this was very short and sweet. I will do more on this, but I hope you guys enjoyed this, and I will catch you guys very, very